button. And okay, so we're recording now, so you might want to click that off on your screen so you can see everything. And let's go ahead and jump ourselves into, no, it says chapter 3 here. If you're following along with the way the book is outlined, we're really covering information from both chapters 2 and 3 in this lecture.
Take a look at this job order costing.
Oops. Okay, 1 second. I've got some things coming in from a different time. So I want to get rid of all these things, or it's you're gonna hear me. You're gonna hear my voice twice. I don't want that. Okay, good. So we're going to be talking in this chapter about something called job order costing. Okay, now it's worthwhile to sort of look back a little bit about what we talked about in the second half of chapter 1. Really? Chapter 1, part 2, or chapter 1, part B, however I ended up labeling that. Okay. And so what we talked about was, look, in a retail entity, when I buy inventory, right, I'm going to go ahead and debit my inventory, right, credit my accounts payable, whatever it is, for something that I will then turn around and sell. And when I sell that using a perpetual inventory system, I'll debit cost of goods sold and I'll credit the inventory, right? And that's really what we talked about in financial accounting. Okay, introductory financial. If you took it here at San Jose State, that's business 20. Okay, and we assume that you were a retail entity. When you acquired goods to sell to others, those goods were already completed. You're a company like, and I always use the example of Nordstrom. You're a company like Nordstrom. They don't make the shoes. They don't manufacture the shoes. They buy the shoes from some shoe manufacturer. I don't know, Kenneth Cole or whatever, Bostonian, whatever the name of the shoes are. And then they go ahead, they debit inventory, they credit account payable. And then, of course, they turn around and sell that to you. And, of course, they don't give it to you for free. So they would debit, say, accounts receivable and credit the sales for whatever they sold those items to you for, right? Okay. Now, all we're going to be doing differently here in chapters 1, 2, 3, and a little bit 4, leading up to our first midterm, is we're really saying, well, what happens if you're a manufacturing entity? And we talked about this last time, right? In that we're going to start with raw materials. Okay, so we have our raw materials, but then we're going to do what? We're going to sit there and take amounts out of raw materials and put them into work in process as we start to get the leather, whatnot for the shoes, right? And then we learned that some materials, I don't know, glue or whatever they use to hold the shoes together, may be considered an indirect cost. And so if it's indirect, we'll go what? We'll go into our manufacturing overhead, okay? So these X's over here, rather than call them X's or just show them as X's, I could put them what they're called. These would be what? Direct materials, okay? These would be what? Indirect materials, and we call them indirect because by definition, anything that's too difficult to trace to the product goes into my manufacturing overhead account as an indirect cost, indirect materials. The other area is what? Labor. So we have what? We have our salaries payable, okay? And so when we incur salaries, we have to pay them. And if it was what? If it was direct labor, then we would go ahead and debit the direct labor, credit the salaries payable. If it's indirect labor, okay, indirect materials, indirect labor, it goes to my manufacturing overhead account because again, I can't track those costs easily to each job. And then we said that we had, and I kept calling those the others. Okay, and so classic example of some of the others might be my depreciation on my factory building. So I'm still going to credit, I'm just going to write it up here, accumulated depreciation, wherever my depreciation is of my factory building. But instead of debiting depreciation expense like I would in a retail type entity, I'm going to gather that cost into my manufacturing overhead account. It's still considered indirect because I can't trace the depreciation on my entire factory building easily to one particular, really, it's going to take me all the way somewhere into who knows where. Really? No, I don't want to do either of these. Now it's going to force me to keep that drawn on that other slide, just so I don't lose what I've already written. Okay, and so we have what? We have our manufacturing overhead, and by definition, it's too difficult to trace something like depreciation to my product. And so if that's the case, I will debit my manufacturing overhead for my depreciation. I don't know why I'm writing manufacturing overhead there. I guess I can't erase it now either. So depreciation would get debited there, and I would have other things like my utilities, my rent on my factory building if I had rent, etc. Okay. Now what we do is we put those all as debits into my manufacturing overhead, and then we apply the manufacturing overhead using a predetermined overhead rate, and we apply that to work in process. And that predetermined overhead rate is how we take those indirect costs out of my manufacturing overhead account, get them to work in process. Okay. Once something is done, then I'm going to go from what? From my work in process to my finished goods. That finished goods is my inventory. It's synonymous with this, but now we had to gather all the costs as opposed to just buying that inventory. So we put that into my finished goods inventory, out of finished goods into cost of goods sold. I mean, that's basically that entry right there. At that point, only we call it finished goods inventory because we had a process that we went through. And of course, we would debit the accounts receivable and credit the sales. Okay. All right, so that's pretty much what we talked about last time. Any question on any of that before we move into what we want to start to talk about here when we talk about process costing? Okay, but it's going to follow very much this format that I've sort of scribbled here on this introductory page. But let's just go ahead and take a look at the nature of product that will follow a job order costing process. Job order costing assumes that each product, each job is unique. Typically, they are built to specifications under a contract. Okay, we'll talk in chapter 4 about something called process costing. Process costing assumes that every single item we come up with is identical. So maybe if we're manufacturing soda, every can of soda is going to be the same. Now, sometimes people will say, well, wait a minute, what about diet versus non-diet? Well, that would be a batch, but within the batch, every single product is exactly the same. That's process costing. In job order costing, we say that every job is unique. So if I'm an airplane manufacturer, like you see, like Boeing, yeah, they produce passenger airplanes, but there's different types of passenger airplanes. They could produce, one of those big old, 747s, or maybe they have these smaller jet airplanes that are more like commuter type planes. Maybe I don't know, maybe they do work for the Air Force where they produce military aircraft. Okay, so every aircraft is going to be a little bit different. And if that's the case, we'll gather our costs using a job order costing system. There's been a contract, somebody's ordered that, and we're producing that good specific to that contract. This middle thing looks like some sort of construction. I don't know, maybe it's Bechtel, does a lot of construction. Bechtel is kind of an interesting entity because it always seems like when there's a war and the United States blows the country up, Bechtel always seems to get the contract to go back in there and build that country back up. And you start to wonder about, well, what are some of the motivations between blowing things up to begin with, or you're going to go back and fix them later. But I'll stop there. But Bechtel often gets those contracts for building and that sort of thing. If you're building a hospital versus a housing community, obviously that job is going to be different. And so those would be done specific to the order for that. Movies, maybe you're doing a romantic comedy versus a Pixar movie. Obviously the cost associated with that is going to be different. And so we would gather the cost specific to that job. Okay, so that's the kind of thing that we're talking about here. And so what I've done is I've gone ahead and embedded some of the practice midterm questions in with the slides right next to where we were talking about a topic, so you can see how the practice midterm questions connect up to what we've learned in the slides. What we'll do a little bit later, I don't know, maybe after the break, depending on timing, we will go back to the practice midterm and pick out additional questions that you don't see embedded in the slides, so we get some extra practice with these concepts. But here I've put the practice midterm questions, some of them that you'll see in your practice midterm for chapter 2-3. You'll also see them embedded in the slides here. So large aircraft producers like Boeing, right off of the slide that we had a minute ago, job order costing. Okay, process costing is homogeneous. Mixed costing, I'm not even sure what that is. Full costing is a concept that we talk about when we're using absorption versus variable costing. We'll get into that in a different chapter. And then simple costing, again, some of these are just nonsense terms. Okay, good. A job order production system would be appropriate for a company that produces which of the following? Landscaping for a new hospital. Well, think about it. The landscaping in front of a hospital is going to be different than the landscaping you'll do for a residential home, right? And so each job is made to order. Every house is different. Even if it's one residential, your neighbor wants this, you want that. So each residential could be different. People have different size yards, etc. So something like landscaping is done according to job order costing. Seeding for sale in a nursery, no. Every packet of seeds that are going to grow a rose plant are going to be exactly the same. The packets are the same. Yards of sacks of yard fertilizer. Fertilizer is fertilizer. Some people say, well, wait a minute, but this is a special fertilizer. Okay, that's a different batch, but every bag of that type of fertilizer is going to be the same. Packets of flower seeds, small gardening tools. Okay, they produce those gardening tools practically on a conveyor belt. Sometimes there used to be this show, How's It Made? And one time I saw one where they were making rakes. Every single rake that they make, that type of rake, is exactly the same. I saw one where they were showing Snoop Dogg how they make sausage. Okay, this is process costing. Every sausage is the same. And Snoop Dogg's trying to figure out what it is they're making, and then finally, when he learns what they're making, he's like, I'm never eating sausage again. Okay, so you never want to see how the sausage is made, but it would probably use a process costing because, again, every slice of that kind of sausage is going to be unique. Okay, I mean, not unique, going to be homogeneous, going to be similar. Okay. All right, good. Any questions, guys? Okay.
Yeah, I have a question.
Yeah.
So for definition of job order costing, is it just like the product itself is unique compared to the like other similar products?
Yeah. Well, the product is unique because it's made to the specifications of the order, job
Oh, okay,
order
okay.
costing. So, if you're a cruise ship company like Royal Caribbean, let's say, right? Well, you're going to have some ships that are going to be bigger with more decks. Other ships are going to be maybe smaller, less decks. Excuse me. Some maybe you're building a battleship if you're a ship builder, right? And that's going to obviously be different than a cruise liner. But though the terms, the specifications for that are really going to be according to contract. You're going to make
Okay.
a contract. You don't go to Sharpie and say, hey, I want you to make these pens to my specifications. Okay, you just go and you buy a package of pen. Every pen is the same. So pens would probably be a process costing because they're all the same. Job order, the job has very specific requirements as to what that's going to look like. So a large aircraft producer like Boeing, they're going to keep track of their cost by airplane that they produce.
Okay. Thank you, Professor.
Mhm. Okay, good. Good question. Let's go ahead and let's take a look at now how we will gather our costs in a job order costing system. And you can see that we track our direct cost, our direct materials, our direct labor, our direct costs. Hint, hint, they have the word direct in front of them, right? And we track those to each job, and we can track those pretty easily. We know how many hours someone who's building a table puts in building that table. We can track their costs as they build that table. We know that they spent an hour on building that table. We can track their labor costs pretty easily to the specific jobs. When we get to our manufacturing overhead will be applied to each job using a predetermined overhead rate. And we're going to review the high-low method that we talked about last time as a way to come up with our predetermined overhead rate. I'm probably going to maybe ask you one question where I maybe have you use the high-low method to determine the predetermined overhead rate. For the most part, we're going to be giving you the predetermined overhead rate, and you're going to have to know how to apply it to the job based on that predetermined overhead rate. And we reviewed that a little bit last time, but we're going to really sink into that here dig into that a little bit more here tonight. Okay. All right. So you've got your costs being gathered by job. What do you call these 30 things together? What do these three things here together constitute?
Product cost.
Good. These are all product cost. Very good. Got another name for it?
Manufacturing costs.
Good. Manufacturing costs. Good. What do you want to call manufacturing overhead besides calling it, oh, hello. It's right there, John. Indirect costs, right? Those are indirect. And what are my indirect costs?
Indirect materials.
Good. I've got indirect materials. I'm not going to rewrite indirect materials. What else?
Labor.
Labor. Good. And
the others.
And the others. And the others constitute things like depreciation on the factory building, rent on the factory building, etc. Good. How about rent on the administrative building? Is that a manufacturing overhead?
No, it's a non-manufacturing cost.
non-manufacturing cost, and it is therefore what?
It's
Expense good in the period
yeah.
incurred, as opposed to being tracked through the balance sheet as as raw materials, whatever. Then what? Then work in process, and then from work in process to finished goods, finally finished goods to cost of goods sold when it finally hits the income statement. Good. Okay, excellent. Good. Good. We remembered a lot of the important points from last time, so that's great. Okay. Okay. Any question on that before we move into this sort of mechanics of this job order cost sheet? Okay, all right. So, this is just sort of showing us how we would gather our costs for particular jobs. So we have this job number 8143, and we're making a wooden cargo crate, whatever. Okay, and it's going to have what? Direct materials, direct labor, manufacturing overhead are going to be our product costs that we're going to track for this particular job so that we know what to put into work in process, we know what to put into finished goods, and when we finally sell that thing off, what to put into cost of goods sold. Okay, so we go ahead and we use up some, materials, and the materials have a total of $116,116. And we have this materials requisition form. Sometimes students say, what's a requisition? It's a what? A formal way, a funny way, a technical way of saying I'm requesting something. I'm requesting materials for this particular wooden crate, whatever it is, and they get some different pieces of wood, and that's $116 worth of wood. Now, what happens? Wood, you could lay it on the table, you could lay it on the floor all day, and it won't turn into a wooden crate. You're going to have to do what? You're going to, excuse me, I jumped the gun a little bit. You have to apply that onto the job order cost sheet. Okay, there's my materials. Then you got to figure out your labor. Okay, so the guy works 8 hours. He has an hourly rate of $11 per hour. And so now we've got this amount of $88. And so what happens? We go over and we put that on the job cost sheet. So we've got the materials, we got the labor. Now we got to do our manufacturing overhead, but overhead is kind of hard to track to the job. So we're going to have to, they call it an allocation base. I don't like allocation base. The correct term that they really should be using here is an application rate. Okay, I wouldn't call it an allocation base as much as I would call this an application rate. Okay, and what we're going to do is we're going to allocate our cost on this job to the job cost sheet and then the work in process finally as we actually incur whatever the driver is of our overhead. And a lot of questions, a lot of the time, the default in a lot of academic discussion is direct labor hours as your allocation base. Sometimes companies will use machine hours. Companies could use units of electricity that they use. It just depends on the nature of the entity, but you select a cost driver to apply your overhead to work in process based on whatever is the biggest driver of your overhead cost. Okay, so let's say the biggest driver of your overhead cost is indirect labor. Okay, then it probably makes sense to use direct labor hours as your driver for your cost and use that to calculate your application rate. Okay, so what you will do is you will come up with a predetermined overhead rate. Now, the reason they call it predetermined is you'll probably calculate what that application rate is, that predetermined overhead application rate. You'll probably determine that before the start of the new year. You're going to estimate what you think your total manufacturing costs are going to be. You're going to estimate what the total number of units is that you will be using to drive that cost. These are estimates. You're going to do it in the year, towards the end of year one, and then you'll use that predetermined overhead rate in year two. It's an estimate. Now, sometimes people will say, well, if it's an estimate, what are we going to do if it's wrong? We'll fix it at the end of the year. I'm going to show you that here tonight. I mentioned that last time. We'll mention that here. But this is an estimated predetermined overhead rate that then you do it in the year before. You don't wait until you're halfway through the year and say, geez, we've got to start allocating, applying, I should say, some overhead to these jobs. You're going to do that before the year start. So as you incur whatever the driver is, say direct labor hours, as you incur those direct labor hours on a project, on a product that you're producing using job order costing, you can apply that to the job as you incur whatever that driver is. They call that a predetermined overhead rate. Now, how do you come up with the predetermined overhead rate? And remember, we talked last time that you could get fancy and use something like regression analysis. We messed around a little bit with a method called the high-low method. And that will help you to come up with this formula that will help you predict what you think your overhead is going to be. So if you're using the high-low method here, notice, and I often like to look at this with a highlighter, just so it helps me to highlight my high and my low. Okay, I see that the high was 850 units with a total cost of 980 or 9,800. And my low was February with a total cost of 7,400 in units of 4,500. And I think when I take this out of slideshow mode, you're able to see a little better. No, I didn't do that. Okay, thought I did. No, just didn't do it. But let's just write it in then. I might as well go back to, since I didn't write it in, let me just go back to slideshow because I would have bet money that I wrote it in. But let's go ahead and take a look. So how do we come up with this 2,400? We simply do what? We take the 9,800. That was the high, minus the what? 7,400. That was the low. That gives me a difference of 2,400. And then I go ahead and I do what? I pick out the units associated with those. So I had at the high 850. And at the low, I had this 450. So that gave me the 400. That gives me what? $6 per hour. Okay. Is my what? Is my variable part of my overhead. So remember, I'm going for total cost, right? Trying to create the formula equals variable cost times the number of hours here plus the what? Fixed cost, right? Okay. So what this is telling me is this is what? This variable cost is 6. Okay. Now, once I figure out that that variable cost is 6, now I can come over, okay, and I can take, and I need to use the high or the low. They decided to use the high. I could use the low, but they said, oh, your total cost is 9,800 at 850 hours. And we figured out that the variable cost per hour is $6, and we multiplied that by the number of units at that cost per hour. Then you take what? You take your total cost minus your variable cost. Difference is fixed cost. And now I sit here and I have what? I have a formula where I can plug in any amount of hours I want to predict what my total, and we're talking about overhead cost in this particular situation here, is going to be, because I want to come up with a predetermined overhead rate. So let's say, just for kicks, that I decided that next year my total hours are going to be 1,000. How would I set up my predetermined overhead rate? Well, I got my fixed cost, $6 variable cost per unit. What did I say, 1,000?
Yeah.
So what does that give me? 4,700 plus 6,000 is how much? 10,700.
Yeah.
Okay. And I want to get my predetermined overhead rate. So what should I do? I'd say my total costs are going to be 10,700. I want to come up with a predetermined overhead rate per direct labor hour, right? Per hour of maintenance, whatever.
Would you divide it by $6
No,
or?
I would divide it by something, not $6. I want to know how much per hour. Let's say I told you you worked, that you made $10,700 in a month, and you worked 1,000 hours. That'd be a horrible month, but okay. You worked 1,000 hours in a month, and I wanted you to tell me how much you make per hour. What would you do?
Oh, I would just divide by 1,000.
Good. Take the 10,700, divide it by the 1,000 hours. So what's my predetermined overhead rate?
$10.7 or
$10.70, you say, per hour?
mm-hmm.
Okay, good. So let's say I'm working on a crate of wooden boxes or something, and I spend 3 hours, 3 direct labor hours on that. How much overhead would I apply to that? My predetermined overhead is $10.70 per hour. I use 3 hours producing a box. How much overhead should I apply to it?
$32.1 or yeah, that
1070, right? Times 3 hours is how much did you say?
$32.10.
$32.10. That's the amount of overhead that I would apply to that job. And I had to do it this way because overhead, I can't trace it directly. It's things like my electricity bills, things like my factory depreciation. It's my indirect by definition. Labor and materials means it's too difficult. So I apply those costs using that predetermined overhead rate. How do I come up with a predetermined overhead rate? Regression analysis would probably be better, but we don't need to worry about the sophistication of the method. We used high-low. I might give you one question on high-low. I'm much more interested that if I give you this, which is what an accountant would expect the analysis folks to give them, the engineering folks to give them a predetermined overhead rate, so then they can sit there and do what? Use it to apply to different product, different jobs. Question? Okay, good. Okay, let's do this one. I think we did it before, but let's review again. It's a little bit hard to see on the screen. Let me see if I can do something about that. I usually have to do the Kung Fu grip thing, ha, to get it to work. No, it doesn't want to. Yeah, it's not gonna cooperate. I'll give it one more chance and then I'm gonna give up. Okay, all I'm trying to do is make it a little bigger, so you're gonna have to put your face up to the screen. Okay, and let's just go ahead and see if we can use the high-low method here. I might give you one question like this. I might give you this very question. I don't know, okay? And so what happens? High-low, I gotta find the high month. I gotta find the low month. High month looks like, what, 4350, guys? If you're seeing
40,
a higher month, let me know.
4470.
4470.
It should be September or August.
Okay, good. Thank you. And what was my low?
2820, I believe, for April.
Okay. I need to look at the activity hours. So you're looking at activity hours.
300.
When you're looking for high or low, look to the level of activity. It is possible that you could have a lower level of activity with a higher cost. All that's telling you guys before you panic is that, hey, these costs are not moving linearly like we thought. It's okay. We're using it to come up with a predetermined overhead rate. By the end of the year, once we have all the complete information, we're going to be able to make an adjustment at the end. So it doesn't matter that the costs are fit, nothing does that in life fits perfectly on a line. That only happens in classrooms, right? Nature does all kinds of weird things, okay? But we're basically fitting in line to these observations to help us estimate. So if you're using the high-low method and you see a high level of activity with a cost, with the dollar sign item is not the high, that's okay. Still pick that high level activity as your high observation. Here, since this is a classroom, it works out perfectly. What did you tell me? It's what?
300.
328.20.
Mhm.
Okay, good. Okay, so we go ahead and we see that. And then we're going to say here, and we're going to say 4470 is my high, right? And then we have what? 2820 is my low. And then we're going to have what? 520 as my high observation, and 300 as my low activity, I should say, on my observations here. So what does that give me? Give me the numbers before you give me the percentage, guys.
1650 divided by 220.
Thank you.
1650.
Say again.
1650.
1650. Okay. 1650 divided by 520. That gives me what? 750.
Yeah.
Okay. Good. And so then it was 750, and then I just had to figure out my variable cost. I mean, well, my variable cost and thus my fixed cost. So I took my what? Total cost of 4470 minus 750, and I'm going to go ahead and stick with my, I have to stick with my high level of activity here with this one. And so total cost minus variable cost gives me fixed cost. Fixed cost end up being what, 570? Anybody got a verification on that?
Yeah, it's 570.
570? Okay, good. And so I'm able then to create the formula, which is total cost equals 750 times whatever number of units I plug in here, plus what? Plus the 570? Okay. And to answer this question, you had to then plug in 420, and that should give you answer C here, 3720, using the high-low method. Now, what I'm more likely to ask you, I could give you all this same information, and then I'm going to not reward you with the right answer just by being able to do this. I may ask you, what's the predetermined overhead rate? Who wants to set that up? Predetermined overhead rate. I mean, this is what I'm going to ask you. You may feel real comfortable with all this. This is where the points are on your exam.
Would it be 3,720 divided by 420?
Good. 3,720 divided by what? 420 gives me predetermined overhead rate of what?
8.85 or 86.
8.86, you say?
Yeah, 8.86.
Okay, good. And so let's say a job used 10 hours of activity.
then it's
88.6.
80. Yeah.
So what is it? 8860 is what would get applied to that job?
Mhm.
Yes.
Okay, good. Okay, so again, I'm not going to be too hopped up in this because the reality is, you know, these days with all the data analytic tools and whatnot you have, I doubt, you know, you're going to walk into your first day on the work and they're going to say, now get in there and use the high-low method to come up with the predetermined overhead rate. What, you know, is more likely is they might ask you to, you know, run a regression analysis or something like that. I'm going to let the data, whatever they call it, you know, classes teach you that. I want you to know that once you get this number, this is how you use it. Okay? Question. Okay, good. All right, so looking back now at another example, they use regression analysis, the high-low method, whatever it was, to determine that their cost at 160,000 direct labor hours would be a total of 640. You divide that by the 160 estimated. These are estimated, right? Okay. And that gives you direct labor hours of $4 per direct labor hour. Again, they're just doing a little more of what we just did. I took you through the mechanics, but you come with an estimate for the numerator, your total manufacturing overhead, your estimate for your denominator, which is the number of, in this case, direct labor hours, whatever your driver is. That gives you a predetermined overhead rate of $4 an hour. And then in this particular example that we were using, we already knew that this wooden cargo box had 8 hours of direct labor. So the 8 hours of direct labor times the $4 predetermined overhead rate means that we'll apply $32 of manufacturing overhead to this. So we have our, what do we call these three things?
Product cost.
Product cost or
Manufacturing costs.
Manufacturing.
manufacturing cost. Good. I'm just going to abbreviate man cost there for manufacturing cost. Okay, good. So we have our total. Now, the problem with this job order cost sheet is now we have to get the information on this job order cost sheet into our accounting system. How do you get information into your accounting system? How do you get information to your accounting system? Do you wish it in there? Do you sit there and go, please, gods of accounting, let this information fly into the accounting system? How do you get information into an accounting system? First day on the job. Here you go. Here's a job order cost sheet. Go over to that computer over there and get that information into the job order costing system. What do you think you're going to have to do? Will you pray the information into it?
You'll type it in.
You'll type it in, okay? In what manner will you type it in? Where's this information going to go? I have this job order costing sheet. Where's this information going to go? Where will this information ultimately be used by the company?
The balance sheet.
Okay, good. A
The-
balance sheet, because I got to track it through work in process to finished goods, cost of goods sold, where it'll be on the income statement at that point. So it's going to my financial statements. Good. How do you get information into financial statements?
I use the T accounts.
Good. I'm going to use journal entries, right?
Yeah.
Okay, good. So we've done all this of tracking these costs and applying the overhead and all that, just so that we can run these information through my accounting system and produce a balance sheet and income statement, et cetera. Very good. Okay. All right, good. So I set myself up and now I have these stupid question in the way. So hold that thought. When we come back from our a word from our sponsor, we will tell you how those journal entries will work. But first, a word from our sponsor, this multiple choice question. Okay, so let's go ahead and I'm going to ask you for some help on this. And I tell my students that I ask them for help, and then for some weird reason, they think that I don't know how to do the problem. Please don't think that. I can sit here and scribble all over this thing in 2 seconds and confuse you. Okay, I'm asking you to help me so that you track along as you go through it. Okay, all right, good. So we have the company, and at the beginning of its most recently completed year, the corporation estimated that they would have machine hours of 10,000 machine hours, and they estimate that variable manufacturing overhead is 682 per machine hour, and estimated fixed cost is 230,300. What is the predetermined overhead rate? So who wants to set that up?
Would you do $6.82 times 10,000?
Beautiful. Keep going.
You add the other number.
You add the other number, what? Like my phone number? Hey, call me, I'm up in the club. What number do you want to add here?
230,200.
230,200, my fixed cost, right?
Yeah.
Variable cost times what? Times the units plus the fixed cost gives me the total cost, doesn't it? So anybody got a total cost number for me here?
298,400.
298,400, you say? Do I have a confirmation on that?
Yep.
Yes.
Okay. And then the question asked me for the predetermined overhead rate. So what do I got to do?
Divide by 10,000.
Beautiful. Good. Guys, if you can handle this, I mean, this is about as hard as that first midterm gets. If you can handle this, you've got this made. I mean, I'm not going to get any, you know, I'll ask you other things than just this, but this is about as difficult as that first midterm gets. Good. Question? A job cost sheet shows costs incurred by the marketing department. Except the marketing department is not a product cost. These other things are product costs where I'm going to gather the cost, right? You know, name of the customer, whatever. The main thing is that, you know, we gather our cost here, direct labor, overhead, and what? Materials, right? Isn't that what we gathered there? Marketing is not gathered on a job cost sheet. And of course, we have the name of the customer. Otherwise, we're going to say, hey, we just finished this wooden box, but who's it for? I don't know. Okay, throw it in the garbage. So, you know, that's kind of a nonsense one. Question? You already saw this one. This one's a little easier because it gives you the workings down here, okay? But you saw it without that and you still got it right. Okay, good. Let's try this one. Now, this one is a little bit different in that they're still asking me the predetermined overhead rate, just like that last one, but now they're making me figure out what estimated cost should go into the numerator before I go ahead and divide it by the driver here, which in many questions is direct labor hours. So is direct materials part of the numerator? I'm coming up with a predetermined overhead rate. I'm going to have my estimate of all my overhead costs. I'm going to divide it by the estimate of how many units I think I'm going to use. Whatever units of that drive, how many units of whatever driver I'm going to
Yes.
use. So would direct materials be in the numerator?
Yes.
Okay, I'm going to say it again. In the numerator is my estimate of my overhead costs. In the denominator is my driver of my overhead cost. Now they've already told me that I'm going to apply it based on direct labor hours. So I know I have to put direct labor hours down here in the numerator. In the denominator. What goes in the denominator? In the denominator, what goes into the numerator?
Total overhead cost.
Okay, is direct materials going to be part of that numerator?
No.
No, because direct materials is not an overhead item. It's direct, isn't it?
Yes.
Looking for indirect cost here. How about direct labor?
No.
No. Good. How about rent on factory building? Yeah, it's rent on the factory building. It's indirect. How about sales salaries?
No.
That's an administrative cost. How about depreciation on factory building?
Yes.
Okay, now they must have a couple factory buildings because it'd be kind of weird to depreciate something you're renting. So maybe they got a couple factory buildings. So they got the rent and they've got the depreciation on it. How about indirect labor?
Yeah.
Right? Indirect is overhead. Good. How about supervisor salary? Yeah.
No.
Yeah.
Oh, yeah.
Supervisor, remember, run from job to job. Hey, you. It's kind of hard to keep track of how much time they spend per job when they're supervising a bunch of different people working on a bunch of different jobs, right? So we consider that indirect.
Why wouldn't that be the part of the administrative cost?
Because it's called a production supervisor.
Oh, okay.
If they called them the accounting supervisor or the office manager, yeah, then I agree with you that that's administrative. But production indicates that they're working on the factory floor. Okay, that's a good question though. Okay, so we got a total of 45,000. We divide that 45,000 by they already told us, 20,000. Gives me 225 per direct labor hour. Okay, question? Okay, good. Meanwhile, we were talking about journal entries. So we're going to have our raw materials. From raw materials, we'll go to work in process. From work in process to finished goods, we'll gather our manufacturing cost. And then as things come out of our work in process into our finished goods, we call that cost of goods manufactured. Okay. Okay, good. So we've got our raw materials, okay, and we requisition some direct materials that can go straight to work in process. Indirect materials like grease, like glue, like mayonnaise for a sandwich, okay? You can't put that into work in process because it's too difficult to track how much oil you use on any one job, machine oil you use on any one job. So you put that into your manufacturing overhead account. Okay. Now, when you do that, notice we've called our manufacturing overhead account the actual, which is what we actually incurred, versus the applied, which is the amount that we will apply to our work in process using the predetermined overhead rate that we've been talking about. Okay. Okay, good. So far we've got our materials, the direct and the indirect is sitting there parked in the manufacturing overhead account on the debit side until such time that we're ready to apply it. Okay. Okay, good. And there's the actual journal entry that goes with that. Of course, let me back up. You have to buy the materials first. So when you buy the materials, it's like an inventory. It's an asset. It's just that it's raw materials inventory. You debit inventory, you credit the accounts payable. Now, if you're struggling with this part, guys, go back, to Canvas, not right now, but you're going to have to get back into Canvas here pretty quickly. And you're going to have to go back and look at what I put as the review of financial accounting, because it's the debits and credits part. And I'm sorry, but my class is, I'm going to expect you to know the debits and credits. You know, sometimes you talk to people, they say, well, you know, debits and credits, and they blow off debits and credits. Okay. Now, there's two types of people that don't care about debits and credits. One is a person that knows debits and credits so well that they take them for granted. And they've lost touch with the idea of talking to people that don't know what debits and credits are. And so they don't think it's a big deal. Meanwhile, they don't realize that their whole life is dependent on an understanding of debits and credits. Okay, you take their understanding, if you could extract their understanding of debits and credits from their brain, their house would collapse. So there's that group of people. The other group of people that don't care about debits and credits are the people who never learned them to begin with. And you call those people big mouths, as far as I'm concerned. Okay, I was on assignment where a guy's going to explain everything about this type of accounting that banks use to us. When I asked him, well, what's the journal entries on that? He says, well, I don't care about the journal entries. And I'm like, that's all I care about. Without journal entries, you can't run information through your accounting system. Okay, so the building blocks of what we do in this class, at least for these first 4 chapters, is going to be debits and credits. Okay, so if you aren't clear on that stuff, you need to look at it again. So we buy the raw materials, we debit raw materials, we credit the liability, accounts payable. Our liabilities are our bills, and so we're gonna have to pay this person eventually. So we credit the accounts payable, we debit the raw material. We've got the raw materials now, and some of those raw materials are direct, some are indirect. If there's direct, this 40,000, it goes to work in process. If it's indirect, since we can't trace it directly to the job into work in process, we're going to have to park it in manufacturing overhead. We'll stick it there. It'll get to work in process through our predetermined overhead rate when we apply it. And that'll happen in a little while here. Questions so far? Okay, good. So we've got the materials, but materials will not turn themselves into products without some labor. And so what happens? We go ahead and we incur some direct labor and some indirect labor. If it's direct labor, we of course credit our salaries payable. Later on when we pay the salary, of course, we'll debit the payable, credit the cash, but we put it into our pay a bill account, into our liability, because we haven't paid them in cash yet. We go ahead and for the direct labor, we debit work in process. For the indirect labor, like the supervisor's salary, whatever, we're going to debit the manufacturing overhead account. Okay, and so we had 35,000 now of direct labor that went to work in process, 12,000 of indirect that went to manufacturing overhead, and of course you credit the payable. And later on, when you pay these guys, you'll debit the payable, you'll credit the cash, right? Okay, good. Now we have what? We have our indirect materials. We have our indirect labor. We saw how those got here. But now we have, the others. So what are the others? That's a question.
Utilities, depreciation, like
Beautiful.
supervisor.
Well, no, supervisor would be indirect labor. But
Oh,
yeah,
okay. Yeah.
just stop while you're ahead for the first two. Depreciation, utilities, rent on the factory building. Good. Okay, so we have these others, and they give me some examples of others: utilities, depreciation, property tax, right? Since you can't allocate those directly to each job, you set up the payables or the accumulated depreciation for that, and then you debit the manufacturing overhead. Okay, now what happens? I just want to stop at, let's see if it does that now. Yeah, okay, yeah, thank you. It does do that if I hit play. Okay, so what happens? you've got your manufacturing overhead sitting over here, don't you? And over here, you've got your direct cost. And your direct costs start teasing your indirect costs. They say, ha, you're just indirect costs. We're direct costs. You're just indirect costs. Ha, you're stuck in manufacturing overhead. And the indirect costs that are stuck in manufacturing overhead start to cry. And they say, well, we want to be in work in process too. Why can't we be in work in process? Mommy. And here comes mommy, and mommy is who? I'm not going to ask you to get that much into my crazy mind. Mommy is the predetermined overhead rate. Mommy is going to get these what? Get these indirect costs into work in process. And the way she's going to do that is she's going to apply them to work in process using what? Using the predetermined overhead rate. How do you calculate a predetermined overhead rate? How do you calculate a predetermined overhead rate?
You divide the total overhead cost by the estimated units.
Good. The total estimated, not actual, whatever you estimated the overhead cost to be, probably last year, divided by your estimated number of units. Good. Okay. Now, this example gets a little annoying here because they tell me that the predetermined overhead rate is $3.50. Meanwhile, I gave you an example a minute ago where it was $4. Okay, so don't let that mess you up. They just pulled a predetermined overhead rate out of you know where and said, okay, it's $3.50, and they're using now not direct labor hours like we saw in that earlier example where we came up with the $4. They're saying it's machine hours, right? But regardless, you're going to do what? You're going to take the number of machine hours that you incur for this particular job times the predetermined overhead rate of $3.50. That means that I'm going to apply my work in process, apply my manufacturing overhead, I should say, to my work in process using this predetermined overhead rate of $3.50. Since this job used 5,000 machine hours, we debit the work in process, we credit the manufacturing overhead. Okay. Now, when we do that, let me see. Okay, that's okay. I just want to go back. We apply that. When we do that, these numbers probably won't match. So let me see what I have here. So they put into their manufacturing overhead, just following back to these numbers. Sorry, guys. Hang with me. This will make sense in a second. Help me remember these numbers. So in manufacturing overhead, they put what, 3,000, right? That was for the indirect materials, right? And then they put what? They put 12,000 for the indirect labor. And then for the others, which was the depreciation and the utilities and whatnot, they put 5,600. Okay. So if you look at this right now, let's just replace these with some numbers. We've got 3,000. We've got 12,000. We've got 5,000, don't we? Okay, and that gives me a total of how much? What's that?
20,000.
15 plus 5 is what? 20,000?
Mm-hmm.
3,000, 12,000, 5,000. God damn this thing. 5,000 gives me a total of what? 20,000. And then when they applied it over here, they applied what? 17.5. When they use a predetermined overhead rate, they applied 17.5, didn't they?
Yeah.
Does it shock you that they applied a different amount than the actual? No, because we used an estimate. We used regression analysis. We made assumptions that everything was lining up on a line that it really wasn't, etc. We thought we were going to have this many hours. We had a different amount of hours. All kinds of different things that could happen that could cause the amount that gets applied to work in process to be different than when we actually occurred. I know that makes you uncomfortable right now. Hang on a minute. We're going to fix that after we're done tracking all of our costs through our system. So at the end of the year, the end of the accounting period, we'll look and we'll make an adjustment for this. This is the beauty of accounting. If our estimate isn't exactly what we thought it was going to be, we use a pen to fix it at the end of the year. If this was a bridge we were building, this bridge would be lopsided and people would die. With accounting, our estimate isn't perfect. We'll fix it. Don't worry. We'll make an adjustment at the end of the year. Okay? All right. So hold that thought, but let's go ahead now and continue to track these costs through our accounting system. Okay? So we have our non-manufacturing costs. Non-manufacturing costs are our selling and administrative expenses. They are, expensed. They go straight to the income statement. So they are no part of this calculation of our product cost going through our work in process. Okay. Now we sit here and we finish our work. And when we finish our work, we take all of our man costs. This was everything that was added to work in process for the period, our direct materials, our direct labor, our overhead applied. And then we take them out of the work in process when they're done, into finished goods. And once you're out of work in process into finished goods, you're back to introductory to financial. It's going to be no difference. When we sell the stuff, it'll come out of finished goods inventory into cost of goods sold. But it's important that you note, because I will ask you a question on your exam, which I'll say, what is the cost of goods manufactured? And the cost of goods manufactured is either going to be what you subtract from work in process, or the same thing, what you add to finished goods. So it's really going to depend on how you calculate that as to whether I give you the rest of the information for the work in process account or the finished goods account. And I could give you either, and then you're going to have to know that the cost of goods manufactured is what was finished for the period and transferred to work in process and transferred to finished goods. In other words, it's what came out of work in process, what got subtracted from work in process, and what got added to finished goods. Question? So this is purely a definitional term, guys. Cost of goods manufactured. By definition, it's what you finished for the period. It's what you took out, what you subtracted from work in process, and what you put into finished goods. And then cost of goods. So there's a journal entry to take things out of finished goods and put it into work in process. And then, cost of goods sold is not very interesting because it's kind of hard to trick you. I guess if I told you the cost of goods sold, you would know that that's what came out of what got subtracted from finished goods and what obviously got added to cost of goods sold. Okay, and of course you sell those for more than it cost you to make them because you want to make a profit. I'm not going to have you do that last. If you're looking at the slides, if you downloaded them earlier, skip forward to these things. That cost job sheet thing is old hat. I don't want to mess with it anymore. Nobody cares about that. So come to this question. And cost of goods manufactured is the question. by definition, before you start looking at this thing, students see a question like this on the midterm, and their immediate reaction is to panic. They panic and they lose sight of everything they've learned because all they can feel is panic. Meanwhile, if you take a deep breath and you think about what we've talked about, and you think about your training here, right? If you're in a disaster situation, you're going to be a, Navy SEAL. What do they teach you? First thing, don't panic. Use your training, fall back on your training, right? This is how these people do all kinds of heroic things out there. They go back to their training, right? Well, accounting's the same thing. If you panic, you're going to be in trouble. You stay calm, you fall back on your training, you're fine. So, do you know the definition of the term cost of goods manufactured? Anybody want to articulate to me what that is?
Is it so it's like what you finish for the period, so what is taken out of finished goods and put into the work in process?
Yes, but close, but you had it backwards. Cost of goods manufactured is what comes out of work in process and goes into finished goods, right?
Oh, okay.
Right?
Right.
You're close though, good. It's what comes out of work in process goes into finished goods, and I almost reversed it myself. It's easy to do. What comes out of work in process and goes into finished goods. Say it, everybody. Cost of goods manufactured.
What goes out
Cost
of work
of
in
what-
process and goes into finished goods?
Cost of goods manufactured
Cost of goods manufactured
Factor
is what comes out of
is
Is what comes
is
out
what comes
of
out of
work in process
work in
work in
process
process
and goes into finished goods.
and goes
and
into
goes into finished goods.
Amen. Okay. If you do that the night before your exam, the accounting gods will come down and save you. If you don't do that, then you try that prayer on the exam and they don't answer. Okay. Okay, good. So if that's the case, all right, and this question is asking us for the cost of goods manufactured, then it's got to be what came out of work in process and went into finished goods, doesn't it? The prayer we just said. Hello?
Yep.
It's what comes out of work in process and goes into finished goods. Thank you, God. 251,000. Thank you, Lord, for helping me on my exam. Question. What if I gave you this question, but I got rid of this? And I asked you, what's the cost of goods sold? Cost of goods sold is what comes out of finished goods and goes into, cost of goods sold. And that's why I wouldn't give that to you, because it would make the question painfully too easy. Right? What
I
if
didn't
I
understand
asked?
that last part.
Yeah.
I didn't understand the last part about the cost of goods sold.
Okay.
It just says it there.
Well, what if
Sorry.
this wasn't here? What would you do? If that
Well,
was
it'd be
there,
what's sold of the finished goods, which is 226.
if I
Okay.
said what's the cost of goods sold,
Mhm.
you would have to know that the cost of goods sold is what comes out of finished goods and goes into cost of goods sold, right? To answer that question.
Yeah. Okay.
Okay.
All right.
Good. Okay. What if I asked you, what are my manufacturing costs for the period? I love a question like this because it's the question that keeps on giving. What if I asked you, what are the manufacturing costs for the period?
Wouldn't it just be would it be everything besides finished goods?
No. Manufacturing cost has a very specific definition, guys.
Would it be B, C, and E in work in progress or work in process?
I'm sorry.
B, C, and E in work in process?
B, C, E, which is my things that got added to my work in process, right? My direct material, my direct labor, and my manufacturing overhead applied, right? Hello?
Yes. Yeah, my mic is cutting out. I
Yeah.
don't know why.
Isn't that by definition my manufacturing cost?
Yes.
Okay, good. So there's my overhead applied. Got that one. Let's see. I'm looking and they're not making it real clear here, but I'm thinking this has to be my direct materials because I know they took 87,000 out and they gave me the what? Oops. Sorry guys, my bad. I wrote that in the wrong place here. There's my direct materials. Now I'm following that by that letter B, but even if they didn't give me that letter B, 87, right? And if I asked you what's your indirect materials, you should be able to answer that because what comes out of my raw materials, some of it's direct, some of it's indirect materials, right? So I'm assuming that 69 plus 18 equals 87. And then if they sat there and they asked me what was my direct labor, even though they don't show me salaries payable, I can tell you what my direct labor is because it's the only thing left that got added to work in process as a manufacturing cost that was not materials or overhead. So I'm only left with direct labor, right? The 82,000.
Yep.
Okay. So good. If I've got what? I've got my manufacturing over the 18, the 12, I can't tell you for sure. Well, I know how I could tell you that this is, the only way I can tell you that this is indirect labor is because by matching it by these letters C, because they don't give me salaries payable. And then this would be the others, depreciation, also not pictured here. Okay. Okay, but just using that question to review a lot of things, but this question is easy if you know what? If you know your definition of cost of goods manufactured is what comes out of work in process, goes into finished goods. If you know your manufacturing cost, that's everything that got added to work in process. If you want to know what your cost of goods sold is, cost of goods sold is going to be, what comes out of finished goods and goes into cost of goods sold. I'm not going to give you something like this that asks you what the cost of goods sold is because the university would call me up and say, hey, you're making business 20 way too easy because it says cost of goods sold on it. Okay. Question.
So for the 87,000 from raw materials, if so you subtract 69,000 from 87,000, that should give you the indirect materials.
It should, doesn't it? 87 minus 69, is that 18?
Yeah.
Yeah.
Okay, thank you.
Yep. Yeah. You scared me for a minute. I thought you said, well, it doesn't add up. In which case we're going to say cut. Yeah. Okay. Okay, good. Now you come over and the cost of goods manufactured for July. Stop. What are we looking for?
Looking what was
This is
taken.
where a person decides to retire from teaching. What?
We're looking for what was taken out of work in process and into finished goods.
What was taken out, what was subtracted from work in process, and what was added to finished goods, right?
Right.
Thank you. I was going to resign. Just kidding. Okay. Now, if that's the case, we need to figure out what account they're giving us information for. It's either going to be work in process or it's going to be finished goods, right? In order for to be able to answer this. And they start telling me about what account?
Work in process.
Work in process. So since they're telling me about work in process, I'm just going to abbreviate that WIP up here. Okay. Then I'm looking for what? I'm looking for what got subtracted from work in process, right? I'm looking for the number that got subtracted. So every account has a beginning balance. Every account they'll give me information adds for, depending on what they want me to look for. They're going to make me figure out what? The subtract, and then there's an ending balance. Okay, so this gives me BASE. I know that if they're asking me for the subtract is what? Cost of goods manufactured. The number I'm looking for here. So my only job is going to be to figure out the beginning balance, figure out the ending balance, and figure out the add, and then sit there and plug for the difference here. Okay, back into the difference. So do they tell me the beginning balance?
Yeah.
Yeah, 20,000. Yeah.
Good. So I write that in. You use the ninja approach on questions like this. Ninja approach says what? When faced by your enemy, let your enemy strike first so you can take the power from your enemy. I don't know what the ninja approach says. Okay. When I watch, movies, that's kind of what it sounds like to me. Okay. So we have what? We take the beginning of the month and 10,000 at the end of the month using the ninja approach. I just stick in that 10,000, don't I?
Yeah.
Okay. All right. Then they tell me during the month, the corporation incurred 50,000 of direct labor. Well, thank you, God, because I know that I add what to my work in process? Come on, guys. I've said it a few times now. Man costs, right? Manufacturing costs. So I've got my manufacturing costs, which are going to be my direct labor. What else? What are my manufacturing
overhead costs?
Huh?
The overhead cost.
My direct material and my manufacturing overhead, the actual or the applied?
Applied.
Applied. That's the whole reason of having an applied rate, is so I can apply it to my work in process, right? Okay, good. So they tell me 50,000 direct materials, direct labor, right, is 22. The actual manufacturing cost incurred was 58. Was that movie where the guy kept going, don't you dare. It's what? It's the manufacturing overhead applied. The amount that was applied to work in process, they even helped me out a little bit, reminding me that the applied goes to work in process, was 56,000. So when I add these guys up, I get what? 50 plus 50 plus 22 plus 56 is
128,000.
128,000. We got confirmation of that?
Yeah.
Okay, so that's my manufacturing cost. That 128,000 gets added to my work in process. Now, the way I do these problems, guys, when I set them up like this, is I give myself a little subtotal just to keep me from getting a little bit anxious with my numbers. That subtotal is to 148,000. So if I had 148,000 and I subtracted something so that I ended up with 10,000. And I always give myself a little side calculation of that one, because you know I'm not good with numbers. 148,000 minus the 10,000 means that I must have subtracted 138,000 from 148,000 to end up with 10,000, right? Hello?
Yeah.
I started with 20, I added 128, that's my manufacturing cost. I had 148. I ended with 10, so I must have subtracted 138. That means 138 came out of work in process and into finished goods. If I don't know the definition of the cost of goods manufactured, I can't even start this problem. Question. Set your problems up like this, guys. Get used to using this approach. Can't use T accounts for this. Sometimes you say, well, why don't I just use a T account? God made T accounts, okay, so that you could sit there and see what the debits were and what the credits were, and therefore what the ending balance is. That's why God made T accounts. God didn't make T accounts to say, well, we're giving you the ending balance. We gave you the debits, figure out the credits, go ahead. The T account is not made for that. This sort of analysis, I call it base, beginning balance, add, subtract, end. That's good for test taking type situations where we're making you squeeze back up for a number that must have resulted in an ending balance. I could ask you the ending balance, and that would be very kind of me. Do I seem like a kind person to you? Just kidding. I want to really make sure you understand the definitions, right? And how these different definitions affects these accounts. And that's why I would probably have you have to work it like this. Okay? Question. Okay, now, meanwhile, back at the ranch, we had, what was it? 20,000. Someone help me if I've remembered my numbers correctly. For my manufacturing overhead, actual was what? 20, somebody remind me? 20,000 was the actual, right? And the applied was 17,500. Did I remember those numbers correctly? No?
Yeah, that's correct.
Okay. So would you say in this situation, are we under applied or over applied? Did we apply too much or not enough?
Not enough.
Not enough. So we are what? We are 3,000 under applied. Why? Because I used a predetermined manufacturing overhead rate that wasn't perfect. Darn cost, you know, you tell them to get in that line and they won't. We said, hey, you're going to line up like this, right? And they said, oh, yeah, okay. And then they went off and did what they wanted. They didn't line up the way I wanted them to. Something different happened than what my expectations were, whatever. So I'm a little bit off. Now, what I want to do is I want to zero this out so that this balances out to zero. So do I need to debit it or credit it to make it balance? Right here. Hello? Do I need to debit or credit this to make it balance? Huh?
You need to credit it.
Good. Debit on the left, credit on the right. I mean, if you're having trouble with that, wait a minute. I see your future. You're looking at those financial accounting review slides and watching that lecture. I'm not going to do that in here, guys. You need to know, increase an asset, you debit it, decrease it, you credit it. To make them balance out to zero, debits equal credits. Okay. Okay, good. So I go ahead and I do what? I credit this 2,500 to make it balance, right? Now, if I credit something, do I have to debit something?
Yeah.
What happens if I credit something and I don't debit it?
No, it's uneven.
The
The
accounting
balance out.
gods come down and shoot me with lightning strikes. That is not allowed. There is no such thing as crediting an account and then not having a corresponding debit. Anybody who tries to convince that of you, send them to me. I'm going to have a talk with them. Okay, so if there's a credit, I have to debit something, don't I? I just put that credit there. I've got to debit something. So what I'm going to do is I'm going to put a debit over here. And I'm telling you for this class, I'm going to show you an alternative, but in this class, we will always put that difference to cost of goods sold. Now, if I debited cost of goods sold, did my cost of goods sold increase or decrease? Say I already had 100,000.
Increase. Yeah.
Good. I increased it 2,500, right? I just increased my cost of goods sold. And it makes sense that I had to put that as an increase to my cost of goods sold because what happened? I didn't apply enough overhead to my work in process, right? I applied 17,500 when there was actual overhead cost of 20,000. So at the end of the year, I just fixed that little discrepancy by closing out my manufacturing overhead account. It's now 0. And I take that extra, in this case, debit, and that extra debit should have been applied to what? Should have been applied to work in process, then should have gone to finished goods, and then should have gone to cost of goods sold. Shouldn't have? That extra debit that I didn't put into my work in process, and therefore into my finished goods, and therefore into my cost of goods sold, I catch that debit up by putting it straight into cost of goods sold. Now I've what? Now I've applied all of my actual overhead, haven't I?
Yeah.
Got it over there in cost of goods sold. Right?
Yes.
Okay. Okay, good. Now, of course, you're probably anticipating here, well, what would happen? Okay, not consistent with the discussion we just had. What would happen if you had under applied the overhead? I lost track of what I did. I did under apply it. What would happen if I had over applied it? If I over applied it, what would happen? Well, now this would be say the 20,000. We'll leave that at 20,000, and this might be say 2,300. Well, now I'm what? Now I'm over applied. To zero this out, I'm going to do what?
Debit.
This should be 20,300. Right. To zero this out, I'm going to whatever. 23,300. To zero this out, I'm going to debit it now. What? 3,300. And I got to credit something, don't I? And in this class, we'll always take that under or over applied amount where? To cost of goods sold, because I did what? I applied too much. That's all right. You ever go to a Starbucks and a coffee place and you say, give me some coffee and give me room for cream, please. And they fill it to the very top with coffee. So in that situation, they've done what? They've over applied coffee to your cup because you need room for cream, don't you? So what do you do when you want to put room for cream in there? Now, some people say, I drink the little bit of coffee down, and it makes me wonder, well, what kind of weird person are you that you wanted cream with your coffee and then you torture yourself by drinking some of it without the cream? I take that and I say, no, I want my coffee with cream. So I go, what? They over applied my coffee. What do? I take some out, don't I? So I can put the cream in there. Okay, well, that's all you do here. Oops, too much cream. What am I going to do? Dump some out. Now it's right where I want it to be. And this, I guess, would be the drain here, where I go ahead and I dump it into my cost of goods sold, thus bringing down my cost of goods sold because I applied too much. Note to self, don't use the coffee example anymore. You get my point. Okay? Question.
Oh, will this on the exam, will this be will this be a question on the exam?
Yeah, oh yeah. Let's look. Okay. Let's look. Let's practice with it again though, and then we're going to look at some potential questions. Okay. And we'll review it in questions, and then it sounds like you maybe need a little more help to understand it. So let's do it after we've seen the questions. Okay. But let's go ahead here, and they tell me actual overhead was $6.50. Okay. They tell me that the predetermined overhead rate was $4. So they're back to the $4 now, and it's 170,000 direct labor hours. So the amount that was applied is what? 680. So are we under or over applied? Applied 680. Actual 650. We're over applied, aren't we? Okay.
Yes.
So what are they going to do? What is all this? Okay. Thank you, book. We're over applied. Okay, like we needed all that fancy stuff. We're over applied by 30,000. So what are we going to do? Well, we will go ahead, and in this class, we will always take that under or over applied amount and take it to cost of goods sold. You could allocate it between work in process, finished goods, and cost of goods sold. And think about it, guys, because some of those overhead costs, if the jobs aren't done yet, they may still be in work in process. Some of those under or over applied overhead costs are sitting in finished goods if the goods haven't been sold yet, and some maybe the goods were actually sold and it belongs in cost of goods sold. I don't want to get into all this in this class. If this was a cost accounting class for accounting majors, I might say, okay, let's go for it, because this is an accountant's folly over here. I just want you to understand how it affects cost of goods sold, right? So since this was what? Over applied, we put too much into our jobs. There's too much of in cost of goods sold. So what am I going to do? I'm going to sit there and I'm going to debit the manufacturing overhead. That zeroes that out. It's now what? Zeroed out to 680. And I take that over applied amount and I do what? I credit it to cost of goods sold. If it was the other way, if I had under applied, I would do what? Credit the applied, and I would debit it to cost of goods sold. Okay. Here's how you would allocate it potentially, but I'm not going to make you do that. Just by seeing how much of is in each account at the end of the year, and then using that to come up with a percentage. And based on that percentage, that's how much of the under over applied you would allocate to each of the three accounts. In this class, we'll always do cost of goods sold. Okay. And this is the journal entry if you applied it to each. Again, if you allocated it to each, again, we'll just do it to the one account, cost of goods sold. The whole 30,000 in an over applied situation would go to cost of goods sold here, like this. Okay, let's look at this question. Okay, so I'm going to look at this question. I'm going to answer any questions about this question, and then we're going to try the next one, which is similar to this one. Okay, but this is dealing with the under over applied. Yes, I will ask you questions. This is how I will ask you this. Okay, so this Sawyer Manufacturing Corporation used a predetermined overhead rate on direct labor hours to apply manufacturing overhead to jobs. Last year, the corporation worked 57,000 actual direct labor hours and incurred 345,000 of actual manufacturing overhead. Now stop. If I know that they're going to ask me about under or over applied, okay, and I know that because of the choices here, then I know I'm going to have to analyze my manufacturing overhead, and I'm going to have to understand the difference between the actual and the applied, right? I mean, you got to know something to start to answer this question. You got to know that under or over applied is the difference between the actual and the applied. So it must be that they're going to give me some information here that's going to allow me to analyze this difference. So they tell me that the actual overhead cost incurred is $345,000. Do you think I should do anything with that as soon as I read that? If they tell me that the actual was 345,000, should I do anything with that as soon as they tell me that?
You should put it under the actual amount.
Good. I mean, if taking an exam is a fight and you're getting beat up by 2 or 3 different people, who would you hit first? Okay, you hit the, so you know, hopefully this never happens to you. You hit the biggest guy first. So they gave me this 345, boom, I got you. You're done. Now I just got to fight these last 2 little guys to figure out what's going on, right? Okay, so I know I have 345 of actual manufacturing overhead costs. Okay, the corporation had estimated that it would work 55,000 direct labor hours during the year and incur 330. Can I do anything with what they estimate their overhead cost is going to be, and they estimate what the driver of their overhead cost is going to be? Can I do anything with that?
So that
Can
would
you
be,
put it implied?
yeah, applied.
That's the predetermined overhead rate, isn't it? Isn't that the formula for the predetermined overhead rate, or the logic of the predetermined overhead rate? I don't like to use the term formula. Formulas are, you know, H2O makes water. Okay, that's more of a formula to me. This is not a formula. This is an approach. 330,000 is what I estimate my overhead cost is going to be. I estimate that my direct labor hours are going to be what?
55,000.
55,000. So that gives me a predetermined overhead rate of $6 per hour. I apply it based on what? Based on the actual hours I worked. And I worked how many actual hours? 57,000. So 6 times 57,000 is what?
342,000.
342,000. So using the predetermined overhead rate, I applied, right, to work in process 342,000, didn't I? Did I under or over apply?
You under applied.
I under applied, good. So to fix this up, I'm going to close that out to 0. And in this class, since I under applied in this example, it all will go to cost of goods sold, right?
Yes.
Although in reality, it would have run through work in process and finished goods. In this class, we'll put it to cost of goods sold. Good. So I didn't need that part to answer this question. I was under applied by 3,000, wasn't I?
Yes.
Question. We had the question, is this going to be on the exam? Yes. Question. Okay, good. I'll turn you loose on this one then. I'm going to let you do this one. In fact, you want to take a break? Yeah. Let's take a break. I'll tell you what. We'll come back at 5 after 8 o'clock, 8:05. And you say, wow, thank you for a long break, but it's also going to give you time to work this too. Okay. Is that enough time? Break and work this question 8:05, or you want 8:10?
8:10.
8:10. Okay, good. Yeah, I think that's fair. Okay, so 8:10. we'll come back. You'll have worked this, and we'll, of course, we'll go through it together too. Okay. Okay, guys. See you in a little while.